Thanks very much, Paul. Hopefully you can hear me. I'll put my text box to the side just in case not. And good afternoon, everyone. Humble apologies for not being there. As Paul said, I was in Queensland only on Saturday. I'm allowed to go back in there from Queensland, but Western Australia won't actually let me out. The beauties of COVID. But 7th, 8th of April, we'll be there with bells on. As we'll tell you in this presentation, April is the start of Q2, June 2022. That's when we're looking at pouring gold. So hopefully 7th, 8th of April, we'll be able to provide you an update of exactly when that first gold bar will be produced. So let me tell you a little bit about Calidus for those that don't know it. Calidus, we're up in the Pilbara of Western Australia, just out of Australia's hottest town, Marble Bar. It's been a consistent run of 46 up there for the last week. And a big shout out to all the guys on site who continue to work through these conditions. Pleased to say, with an update we put out today, it's 78% complete, which is a huge credit to the personnel up on site working these conditions. That stage one will produce 90,000 ounces per annum. All-in sustaining cost of just under $1,300 an ounce, 8-year mine life, and as I said, first gold due in the June quarter, so any time from April through to June next year, and we'll provide the market more updates as we get closer. Once we've bedded that down, we'll be going into our stage 2 expansion. That takes us through to 130,000 ounces per annum. That's by including the ultra high grade blue spec underground. We're currently doing a bankable study on that. We've announced some drilling recently that I'll take you through. And once stage 1's bedded down, we'll commence stage 2 with the aim with a couple of years' time to be up at that 130,000 ounce per annum run rate. We've got a 1.7 million ounce resource base. We've got great near mine and regional exploration targets. And most importantly, the management team, we've been there, done it before, building mines, operating mines, and it really is first class team that we've got both in the office and up on site, and all the people that are contributing to the fantastic work that's being done up on site at the moment. Quick run through, so 228 million market cap. There's so much value to be had there once we get into gold production. EBITDA on current gold price is somewhere around 100 million per annum. So we do see that there's a large amount of value still to be had in our share price. Alkane Resources has been a hugely supportive shareholder and have just under 10% of the company, along with a fair few institutions and then predominantly a lot of retail investors. If we have a look at where we are in the Pilbara's made a lot of news lately through De Grey, massive discovery out at Hemi. We were up in the Pilbara from 2016. During that time, we've grown the resource from 300,000 ounces to 1.7 million ounce when you include blue spec. And the spotlight's really turned onto this area a lot because of De Grey, but also the fact Capricorn's just gone into production. Novo's just rebirthed the Nullagine project, and we will be the next gold producer in Australia with WARRAWOONA. So a fantastic place to be, not just for iron ore, lithium, but also very much gold. This is an overview of site. So when I take you through the latest fly-throughs, you get a feel for where things are. We've got a fully established 240 personnel village on one side of the range, the processing gold plant being built over the other, the mine 500 metres away, and a tails dam just down the valley. So a very compact site makes operating a lot easier. Talking of which, this is the mining. So we've started to knock the top off the hill. So our ore body outcrops at surface. These areas that you're seeing on the top that we're levelling out actually contain ore. And one of our problems has been getting enough waste to build the ROM pad to put the ore on. So we're digging away with some 85-tonne diggers and articulated trucks. We've just mobilised a 120-tonne digger to site. That should be operating any day now. The 100-tonne trucks are coming in very shortly, and the 200-tonne digger should be in at site around March. So certainly the mining side is really starting to increase now. The plant itself, which will fly through, is 85% complete. The tails dam's now done. All the civil works have been done with that earth moving kit, and that's why we're focusing in on the mining. We're doing a lot of grade control. The lab up on site's now running and operational. We're starting to get assays through. So we're really making that transition from construction into operations, certainly on the earth moving side. One other thing to look at there, the ROM pad. As I say, it's getting bigger and we're now starting to put some more up on the pad. We'd like to have about 200 to 250,000 tonnes on the pad when we start up the mill in Q2 next year. I talked briefly on the tails dam before. It's quite a structure when you see it up close, heavily engineered tails dam that's been complete by McMahon contractors. Have done a fantastic job. It's a work of art, and to have that in place already so many months in advance of operations, just takes the pressure off as you transition from construction into operations. So we'll do a fly through through the plant. What we're looking at with the white tanks, it's 2 of our 200,000 litre diesel tanks. We'll have 1 million litres of storage for when cyclone season comes in future. Next to that, we'll have some big LNG storage. That will be our predominant power supply. We're moving over the power station. We're pulling cables. We've got 3 1 meg gensets in and the other gensets due in February. Where the yellow crane is, to the left of that, there's water services. To the right, the big green tanks are cyanide tanks, and that's our reagents and, that we use in the process. Obviously, we've got the big tanks, they're called CIL tanks. That's where our gold is dissolved, and the structure there that's not clad in that is a gold room where we recover it. Obviously got our mill, and we had a momentous day the other day. We started turning that, so inching that to get all its alignment correct. So that is powered up, lubricated and turning. The crusher is fully connected to the ROM pad, fully installed. We've got just the crusher bin to put in there. Most of the conveyors are now in place, bar the conveyor belting. Reclaim bins are in place. So really the bulk of the mechanicals and structural steel is now complete. And we're really now into piping and electrical to finish off the plant. And that's why the plant is looking 85% complete. It is looking like a gold mine now. We just need to do, it's like a house, I suppose. It's those finishing touches that seem to take forever. But GRs have got 50 people on site, soon 60, doing a fantastic job building that. And we look forward to that commissioning in Q2 next year. Quick snapshot of the camp. Asset Link, our catering contractor, does a fantastic job feeding everyone and looking after everyone there. Great views of the ranges and a great place to be based while up there. Been through that, it's another quick view of the site. Just a lot happening and coming together very well. A bit more work on bore fields, mining to be done, but everything is on track. It's on time, it's on budget. We're not very far away at all now, and it'll be a very exciting year for all of us. None of this is possible without a social license to operate, and we see this as an integral part of doing business, and we've done it since day dot, before ESG, if you like, became sexy. We've got solar power going in, batteries going in. We're doing cyanide destruct that not many gold mines do, to ensure we don't have any negative effect on the local wildlife. We contribute to the Pilbara Offset Fund. We've actually sterilised a portion of the shear as a conservation zone for bats, for some of the old workings, to ensure there's always a refuge for them. In conjunction with Atlas and the Shire, we're looking to upgrade the local airport. That should kick off next year. There were a few delays. We certainly try and employ as many local people and contractors in the operation. I'm proud to say we have not disturbed one heritage site in any of the work we've done to date. Just briefly on the metrics. So the operation itself, as I say, 90,000 ounces per annum, stage 1. We're funding that through equity and a $110 million debt facility. As part of that debt facility and our ongoing treasury management, we've hedged 145,000 ounces at just under $2,370 an ounce. That's about 21% of gold production. But it gives us a nice security blanket as we move into production. At current gold price, as I say, you're over 100 million EBITDA with capex of 120 million. So incredibly rapid payback. That gives you that wonderful post-tax IRR of 57%. at the previous hedge price of 2,355. There's a lot more detail in our feasibility study online, so please feel free to look at that. We sort of almost passed this slide now on de-risking. We are doing grade control. GRES have almost built the plant, and everything is on track. You know, what we're seeing in the grade control is what we expect. GRES, normally their plants, you know, outperform 10%, so we don't see any issues with throughput. There has been increase in costs. There's increase in labour, diesel, some of the reagents and inputs is increasing. And I think that's a factor across the whole industry. So it might have a small impact on our operating costs, but from a capital cost point of view, we are still within budget, and that's largely due to the lump sum contract we've got with GR Engineering. Beyond stage 1, stage 2, Blue Spec. This is a deposit we picked up recently, put some holes into. Those holes are there on the bottom left of the screen, 4 metres at 33, 2.5 at 44, 3 metres at 20. As I say, it's an incredibly high grade deposit that we've secured down at Blue Spec. It's made up of 2 known deposits at the moment, being Gold Spec and Blue Spec. And we intend to mine them from an underground operation, truck the ore back to WARRAWOONA, where we'll process it. Around Blue Spec though, we do see a lot of potential increase for both mine life and resources. Down dip of Gold Spec, 100 metres down, we're still seeing intercepts 4 metres at 35, 12 at 5, that's outside the resource. Blue Spec East, 11 at 7, 18 at 4, that's not in any resource at the moment. We've got a rig up in WARRAWOONA at the moment drilling. It'll be moving to Blue Spec East shortly, and as part of that we'll also drill a parallel shear to Blue Spec, so that should all be done before Christmas, so we're pretty excited to see what those results give us. Stage 2, what does it do? As Paul said in the intro, it takes us up to 130,000 ounces per annum, so you know, a really meaningful gold producer at that point. The overall all-in sustaining cost doesn't really move, so it increases our cash flow, you know, up to that sort of 130 to 150 million a year when we're at steady state production. And again, I sort of draw your attention to our market cap of 230 million. There does seem to be a disconnect, and certainly we believe once we get either closer to production or in production, you know, there will be a significant re-rate at that point. Paul Brennan in our Perth office is working madly on the feasibility study with various consultants, and that'll be out sometime in that second quarter, June quarter of next year as well. Regionally and exploration-wise, we've got a lot on, obviously around Blue Spec. Klondike over time, we'll be looking at depth, that's our main deposit. But we're also doing some regional drilling at the moment. We're drilling just north of Marble Bar on the Marble Bar Goldfield, testing some previous intercepts where numbers such as 8 metres at 4 need following up. But we're also looking at near Klondike, let's say within 10 kilometres, so very easy trucking. And we've got what we call the Brockman Hay Shear, which sits out to the west of Klondike. Really hasn't been drilled before, so we're putting quite a few holes into that area to see what's out there. There's some good looking alteration, good looking rocks, but we need to test it out with the drilling. So that drilling is underway as we speak. Obviously a bit of backlog in the labs these days, but you know, we'd hope to get those assay returns in the first quarter of next year. From a timeline perspective, you know, we're very proud of achieving what we say we'll achieve. And this slide really hasn't moved in the last year. We're talking about main mining commencing quarter 1, quarter 2, that is underway, and mill commissioning first gold will be, you know, into that quarter 2 period for the first gold. DFS Blue Spec we've talked about will be quarter 2, and that regional drilling is underway. So a very exciting 3 to 6 months ahead between drilling, between the construction, between first gold. Lots happening on site, but a fantastic team doing a great job up there. So that is a very brief run through on Calidus, just hitting the main points. 90,000 ounces to start with, building up to 130,000 ounce looking at a $1,200 margin on current gold price. So somewhere between 100 and 130 million EBITDA for a company with a market cap of around 230 million. We are fully funded. We're on budget and on schedule for that first gold in June quarter. We are out there exploring, not just to add mine life, but to find new deposits. And I think the final point as well, we'd like to emphasise that we want to use that cash flow to become a multi-mine mid-tier gold producer. A single asset producer trades at a discount. So if you can sweat more value out of your asset by bringing in another asset, once you've proven you can develop, that's something we'll be red hot on and something we'll be pursuing aggressively in the next year as well. And we think that's a pretty exciting journey for shareholders ahead of us. Apologies, I can't be there to take questions. I will be there in April. I will be out of quarantine by then, I'm sure, and look forward to chatting. We're very active on social media. Lots of these updates and videos are on social media. So please sign up to one of those platforms to keep up to date with what we're up to. If you've ever got any queries, feel free to drop me an email. They're on most announcements, my email address. I wish you all a very Merry Christmas, Happy New Year, safe festive period, and really look forward to catching up with you all next year. Thank you very much.
Thanks, Dave. Before you run away, we do actually have a couple of questions if we can impose on you, and I'll put them from the lectern, if I may. The discussion concerning rising costs and staff shortages in the resources industry is obviously widespread. Has Calidus got in ahead of time there? Obviously, you've been building for a while. Did you manage to get in under the bar there?
By the skin of our teeth, Paul. I'd love to say it was good management, but I think it was just sheer good luck that we managed to get everything done in time. Look, costs have been rising, and as I say, an operating cost that will be reflected. We will see a small increase in operating costs just because of diesel and labour, what have you. Certainly from a capital cost point of view, if we were to build WARRAWOONA today, I'd be saying add 20, maybe even 30% to that cost and add time to that construction program just because labour is getting very, very thin on the ground. Now that might change when borders reopen next year quite rapidly, and we do expect to see some of those costs like diesel come down at some point next year, but very much got in by the skin of our teeth to build this just in the nick of time.
And Dave, a second question. You're obviously well advanced with the plan to bring Blue Spec into the production profile, but is there scope looking longer term for WARRAWOONA or Calidus to be the hub of a greater production network within the Pilbara?
Yeah, very much so. So we sort of sit smack bang between two big granites, and it's the greenstone belts that encompass those granites all around them, where the gold is hosted in the East Pilbara, and they're about 60 to 80 kilometres in diameter, those granites. So anything within a 100-kilometre radius of us in that greenstone belt is fair game, because without another major discovery, the critical mass is not there for anyone else to build a gold mine. So we are actively talking with our neighbours all the time about their ground, what they're up to. There are existing resources within trucking distance that we always discuss with our neighbours, but we've got to choose the appropriate time if we were to do more transactions. But without a doubt, that hub and spoke model, trucking from satellite mines, is very much part of our plan in the future.
And you're in the home straight now, Dave. Only a few months or not much more to first production. Would you expect that as you close in on that milestone, there would be a share price re-rating, given that's often the case for companies that de-risk the project and move towards production and cash flow?
Oh, yeah, look, absolutely in my mind, Paul. There's such a value disconnect. If you look at the other developers that have just become producers in Emerald or Capricorn, 500-600 million for Emerald as a market cap, $1 billion for Capricorn. They're a little bigger than us in stage one, but we're probably a little bigger in stage two than them. So that gives you a feel for the potential re-rate, assuming we continue to tick the boxes, which we have done since we listed, I believe. So very much I'm a true believer that re-rate is just around the corner.
Thanks very much, Dave. And it'll be great to get you over to the Gold Coast in April. Thanks for joining us.
Thanks, Paul.